Hi everyone and welcome to this week's edition of ProcDesk Weekly. It will be a very interesting day today. Maybe be almost too much. I'm talking about Liberation Day. I'm talking about the idea that the US will potentially introduce sweeping tariffs covering most of the countries of the world. And a lot of people are obviously in a situation where they see maybe stock markets coming down quite sharply. My experience though, when this kind of happens, is that you actually tend to have almost nothing happening. So we'll see how it could impact, and we'll look at the details now. Before we start though, I need to stress that trading financial markets unfortunately is high risk and we may lose all of our invested money. As well, I will be sharing my take on the market, but always do your own research because what I'm doing here is not providing trading advice. Okay, good. So, Liberation Day, will it push the world into recession? So this could actually impact more than just our trading accounts. It could potentially impact, what happens on a day-to-day basis. If you are trading though, this is actually quite good in a way, because when you have recessions, you have volatility, and with volatility, you can make money. And it's the opposite actually. When the economy is doing really good, that trading just goes really boring because there's no uncertainty. So the market sort of just trades sideways for a long time. With that in mind, this is what could happen today, and it's going to happen at 4 p.m. Eastern time. That will be 4 p.m. in New York. That is when we will have an announcement. So what are we talking about? We're talking about potentially the US putting tariffs on people that are tariffing the US. So this is a chart provided by Capital Economics, something you can find online for free, this specific image. And this is the baseline, this is zero, okay? So you can see that certain countries like India, Turkey, Brazil, Argentina, they're way above the global average, which is around these levels here, around sort of 4-5%. And these countries, they will feel the pain because when they want to export to the US, that's the fees that they're going to be paying. And this would normally weaken their currency. If you look at other countries or regions like the EU, which is not much higher than 2% on average, UK is sort of negative, which means that the US is tariffing them, and then you have China, where the US is tariffing China more than is tariffing the EU, so the US. So if you look here, these are sort of what we trade. You won't see too much activity. And maybe what you could potentially focus on is maybe South African Rand. They could be also impacted. In fact, when all these emerging market currencies are impacted, then South African Rand should also be impacted. Now, what's interesting here though, is that this is just, this is what economists estimate. So that's what we're looking at. And if it's just this, again, I don't think there's going to be too much activity. I think it's going to be a bit quiet, okay? Question forward. On the other hand, there are other barriers. There are other things here that could influence things, okay? So we have, for example, like VAT. Trump thinks that VAT is a trade barrier for some reason. There's other stuff, though, that is real. For example, in the EU, the healthy and safety requirements on food are much higher than the US in certain aspects. So certain US agricultural products are not even allowed to be imported, okay? In the case of China, many times if you want to set up a business there, you need to you need to work with a local partner, and there's a risk that, whatever you have learned as a company, when you set up this in China, the local partner will learn about that, and obviously there's a risk that, this intellectual property could be used, and then other people would usually use that to set up their own businesses to compete with you. And that is obviously things that doesn't have an actual number on it, okay? So it's much more difficult to say exactly how much that is worth. And that is where it can become tricky. That is why, for example, people think there could be a 20% sweeping tariffs across the board. That is the problem, okay? If that would happen, it's gonna be across the world. So anything that comes to the US would be facing this. And we're talking about high amounts. So the margins would be shrinking. The producer, so the foreign countries will probably need to lower the prices. At the same time, the US consumer say Walmart and these places that will buy all of this and then sell it to directly to the clients, they would need to ramp up their prices. So the problem is everybody else makes less money and US citizens need to pay more, okay? So there's no winners here. And at least not in the short term. And that is the issue, if this happens. A big thing here as well that people are not necessarily aware of is that before it was just tariffs between sort of US, China, sorry, US, Canada, Mexico. It's quite easy to deal that. It's not too many moving variables. But if it comes across the whole world, then you'll see UK knocking on the door, Australia, Canada, Mexico, Brazil. Everybody would like to speak with the US government. And they don't have the bandwidth to deal with all these countries at the same time. So realistically, if that happens, there's not going to be a quick deal. It's not going to be 2-3 hours later or maybe 2-3 days later. It might be prolonged. And this could and has historically sent the world economy into a recession. And this can have obviously big impacts. And we don't know. This is what could happen. This is usually, it wouldn't surprise me. And if this happens, okay, stock market's probably going to down quite a bit, okay? How much more, I don't know, but maybe 10%, something like that. Crypto as well, drop quite a lot. On the other hand, if it's just, as I said before, what economists predict is going to happen, then realistically, you won't be seeing too much of activity, except, South African rand, as I mentioned, and all these emerging currencies, which again, are not very easy to trade, but are definitely tradable. So that is what you need to look forward to today. Okay, that is happening today. And we had the ADP numbers coming out just a couple of hours ago. They were better than expected, telling me that realistically you will have the NFPs as well being relatively strong. Okay, that's good. And we have a jobless claims tomorrow and US ISM services PMI. Now, I don't really bother too much with the PMIs right now because we just had readings last month. They were all good overall. And there are obviously challenges that we're not necessarily people not really thinking about too much. And the fact is that in terms of manufacturing in the world and also in the US, people are hoarding. Okay, so they're buying things, importing cars, importing whatever they need before the cutoff period, which will be tonight. That is causing manufacturing to be quite strong, even though it's not strong. Bear this in mind, it's not particularly strong anywhere in the world, okay? Services strong, manufacturers not strong. So imagine what's going to happen next. What's going to happen when this comes down? So the PMIs and all that starts to move to the downside. So maybe we're dealing with a artificially propped up, because whatever they were supposed to produce in the next 3 to 6 months, is trying to produce that as fast as possible to be able to avoid these tariffs. And that is an issue. As well, auto tariffs are probably going to kick in. They've been delayed and will probably kick in, I think they said Thursday. We'll see what happens. But it's going to be an eventful day. I think it can easily be a bit like we had with the US election. Okay, during the US election, we had a very good opportunity to buy cryptos and stock market indices. The difference there, though, is that things were looking good. You should just have bought. That's what I did, and everything played out really, really well. The problem now is sort of if we don't have bad news, so then probably you'll have just it's going to be bad news in any case. Okay, bear that in mind. The question is if they come in with a big hammer, those 20%, if that would happen, then you can see stock markets come down. Another thing as well, which sort of complicates the issue, is that they might say 20% tariffs starting in 1 month, starting in 2 months, because they want to have time to negotiate. So it could be one of those. And then I think realistically it's going to be quite choppy. And if you start to trade that, you will have a very high risk of losing out. Let's take a look at the charts. All right, so let's take a look at the Euro USD. So it's been a bit boring here, Euro USD. If you look at it from a big picture perspective, we're just trading sideways. This is a three-day chart. When things are trading sideways, it's really difficult to say what's going to happen next. It's not really where the money is, but at least in the short term now, the market sort of bottomed out around the 200-day moving average. As long as trade above 107.35, I think we can swing a bit higher, maybe to 109, maybe 109.60. But people are looking at here tonight that normally what would happen is that you would have the tariffs hit the economy. So for example, if they would put a 10% tariff on the euro use on the euro area, then the currency would drop maybe 5% to compensate for that. But what's been interesting recently, and what a lot of economists are talking about the fact, is that they estimate that actually the tariffs are hurting the dollar and not the other way around. I'm not 100% convinced on that. It is a bit difficult to separate what's actually happening here in the way that we have this push here that happened on the back of what happened in Germany. Okay, I can see that my screen is going a little bit crazy. Let me see if I can just change things here. I don't know if you see that, but it's flashing. Yeah, let's just, sorry for this little interruption. We are going to move things around. Oh, just a sec. Gonna make it a bit easy, and we're just gonna yeah, I'm not sure we're gonna be able to proceed. Yeah, my system is freezing up. Sorry about this. We would need to follow up on this at a different time. It's not possible for me to actually change between the scenes right now. I'm not even sure if you can hear me. But yeah, sorry about this. We will continue another time. Be very careful when you trade today. High risk that we have stops out. If you don't know exactly what you're doing, if you don't have the risk, then be very careful. Let's actually see now. Maybe we can get it back up. Oh, there we go. Okay, this might actually work. There we go. All right, so we should be fine now. Let's see. Okay, so Euro USD. Yeah, let's break for today. Sorry about this. I hope you have a good trading day, good trading week. I think it could be really interesting. I'm gonna be up until late to see what's happening, but again, be very careful with what your risk is. It's not necessarily a day that is definitely gonna be very difficult to trade. So if you want to skip it and return tomorrow when it's a bit more clear, then that is usually a very good idea. Thank you so much and speak soon. Goodbye.